Monday, December 8th, let's level up. Market was very choppy today. It did recover into the close, but there were some sellers. I think today was just a bit of a buyer strike. You're seeing the VIX pick up a little bit, some protection being put on ahead of the Fed. The consensus is that Powell is going to be hawkish at the presser, and interest rates are actually doing something different this time. They're rallying into the Fed decision as opposed to pulling back. And in the past 3 meetings, we've seen the Fed cut rates and then interest rates go higher because rates had gone lower. It was a bit of a sell the news opportunity. And in this instance, it could be a buy the news opportunity, meaning bonds are selling off ahead of the Fed and then they get bought up after. With regard to the VIX, a little bit of volatility coming back in. I told you I thought that we were going to see the risk of maybe them holding the volatility through the Fed. We do technically have a look below and fail of the 1562, so that is the must clear on the downside for still higher prices to stick, and I think to get over and stay over 6,900. And by the way, if we can't stay over 6,900, there is still the $100 table risk for the 6,800. That being said, the upside resistance here is 1852 to 1870. That has been the higher end of the range, roughly around the 50 MA area. As far as the ES and the NQ go, we're kind of trading between levels. For me to feel super comfortable that the ES is not going to continue going lower, at the very bare minimum, it needs to be over 68.8075 and really 68.93. If it can do that, I think it's stabilized, but we do need 6,900 plus to stick for the run to 7,000. Obviously. As far as the Qs go, the bulls have a potential double top here. So for the Qs to fly, they need to clear at least high of day here at 25,860.75. If you want to be short against that, that works, but above it, it runs. Now, shorter term, 25,670 is the must hold. If that breaks, we could come down to somewhere between 25,461 to 25,546. As far as TNX goes, this is our proxy for the 10-year yield. We are right into neckline resistance at 41.88 to 42.05. If that clears, there is room up to the 200 MA at 42.48. We are bumping up against a short-term channel high, but we did have a trend break the last couple of sessions. I would feel more comfortable with rates going lower, back below both the 100 MA at 41.53 and today's low of day, particularly with a lower high tomorrow, below 41.43. As far as SPY goes, pullbacks to the 78.6 have held. It's got to hold 681.39, roughly with a little give to the 10 MA at 680.62. As long as that area holds, it's still okay. Below gets more bearish for a check back to 673.95 to 675.56. Remember, that was the 1010 reference high and the 1120 reference highs before the big dump candles. On the upside, we filled in the Fed day gap from the 1029 gap at 687.39. We're night putting around the 1112 lower reference high at 684.96. So anything over that is incrementally more bullish for a run back up to the highs. As far as the Qs go, a little bit below the 78.6, that's 624.96. Anything over that, I think, remains more bullish than bearish. Below is more iffy with downside liquidation break potential for, again, a move down to those 1010 and 1120 reference highs at 613.18. And because the 1120 reference high is between the 61.8, of course, the 1120 high being 614.03, I'm using the 1010 reference high in the 61.8 of the range, so between 613.18 and 615.51. As far as Apple goes, we are one time framing to the downside, so the very clear trade here is wait for the one time framing to end. I think if we clear today's high of day at 279.67, there could be a run back up, maybe to as much as 285. Anything that stays below 277.32, I think risks a move down to the old channel high confluence with the current up channel at 272.41. But we have now 4 down days, and we could see a fifth. Usually these things end on odd number days, so look for that to take place. And then when we clear a prior day's high, I think it's back to the upside. If you want to do some kind of 1/2 put ratio playing for a pullback to 265, I don't mind that. A 20-something point pullback to me makes sense, and then we would be interested in buying the dip. NVIDIA getting a little love. Apparently their chips are going to be able to be sold in China, but these are the stripped down chips, not the Blackwells, and China is starting to manufacture their own AI chips. We weren't able to clear over the 50 MA. If anything, we had to look above and fail with the 50 MA, and remember what we talked about, that needs to clear and hold. We are over it now in the overnight session, so very simple. Just don't let price get below 187.24, which is the 50 MA. Anything above, bullish, below, bearish again. On the upside, I think we could target the 190.87 level, and then 195.62 is the must must hold, pass, don't pass for still higher prices, and it might be resistance on the first test. As far as Bitcoin goes, we had seen this big plunge on the weekend session. It did recover. 20 MA is the short-term must clear at 92,054. If that clears, we could test back maybe to as much as 99,090 to 103,745. Generally speaking, I think there's a bit of a buyer strike. There's going to be a lot of chop the next day or two. Ahead of the Fed session, Fed obviously reports on Wednesday. We're going to see what Powell has to say in the press conference at 2:30. I will be live with you. If you are not currently subscribed and somehow seeing this, you can go onto my profile, click subscribe, and then you'll have access to my live Fed day analysis. I give real-time levels, trigger levels that is, and trade setups as we go. I also give real-time analysis of Powell, whether I think he's hawkish or dovish. I have a feeling we're going to see some dissents, but this is already expected, and everyone is already expecting Powell to be hawkish. So if he is hawkish, it's going to have to be double hawkish. What I think could happen is this. If we're down enough into the Fed, there could be a relief rally. It's also possible we see some type of a knee-jerk move down, maybe a day or two, and then we get the end-of-year rally post-Fed because we know they are still cutting rates. I think if Powell comes out overly hawkish, it won't be so great for the market, at least short-term. Maybe the last guy kind of pukes and gets out of it, but ultimately I think it will set up for a year-end rally. Like and follow for more.